Before we get to Peter, I have to continue to underscore the opportunity that North Korea and some of the rhetoric that's going to come out, some of the activity that might come out, could possibly have. So let's not miss it because we weren't ready. Everybody in the room, in the Edge room, in these meetings have no excuse but to be ready. Something happens overnight, something happens on the weekend, nothing that we could do. But we know how to react to that press conference. Came in kind of impromptu. One of the room members mentioned it, and it rolled right into some opportunity that was yesterday. There will be more. So in these weekly meetings, it's important that that gets covered just to make sure you miss less. That's one. Secondly, the wait, hold on. Secondly, I don't think that there's a high enough level of simplicity in this group that there should be. I think there is more simplicity than there is in any other group. I don't think it's high enough. I also don't want people to wear the same pants. We can't all wear and fit into the same pants, but yet it's pants that we want to wear. All right? That's what's important. It's shoes that we want to wear. You can't wear the same shoes. And maybe if you do, it isn't going to be the same size. You have a great pair of shoes, but if they're too small, they're not comfortable. Don't mimic too much of other people, but create 1, 2, 3. Ready, aim, fire. What's yours? We talked about the Step 1 series. Peter talked about he feels like more people should be on board with some trades that are out there, some opportunity that's out there. But he doesn't know, right? You only assume that there are enough people or not enough people on certain moves or trades. And, in an effort to share and collaborate and get people to where we want everyone to be, and that is consistency, we want to, walk through this again and again and again. Let me open up Peter's mic. Most of you know Peter as a guy who contributes a lot in the team room. Also the second smartest guy in Illinois. Let's open him up. Peter, how are you? God bless you.
That's funny.
Did you go to the Bears game?
No, we did not head down to Chicago. I wasted such a great day on a football game. I only saw a little bit of it. I saw enough to see Cooper do that ridiculous play. That was about it.
Yeah, I don't watch a lot of football unless it's my fantasy football, and that's it. All right. So, but you agree with what I said, right? You feel like there always is, there should always be more people on certain trades.
Oh, totally.
And do you think that there should be a higher level of simplicity?
Keeping it simple is key. And I have yet really to meet someone who's been on a lot of trades or in true trades frequently that has a complex system. The guys that in the room that I know that trade quite a bit each day successfully have, they've isolated their technique down to be fairly, I don't want to say simplistic because there's a lot behind the scenes work that went into developing what they do, but they don't need to see, they don't have a checklist of 10 different things that have to happen in order for them to take a trade.
It's simplistic to them.
Exactly. Yeah.
They made it simplistic to them, and they just understand everything that goes into it, and that's what's important. So Peter sent me a link to an image of this 1, 2, 3 process that I'm going to pop on the screen right now. Let me find it. I'm assuming you're looking at my screen.
Yeah, that's right.
You could actually, if you want, this will be pretty cool if this works.
What's that?
Wait, I'm going to show you. Did something pop up on your screen?
Nope.
How about now? Nothing?
Nope. What's supposed to pop up?
To allow you to draw. You could actually draw on my screen.
Oh, I think, I don't see it. Hold on here. Oh, yeah. Okay, I got a drawing box. Yeah, I'm on my main screen. Okay, we're good.
But could you draw on my screen?
Yeah, I just drew a couple boxes on mine.
I don't see them come
Oh,
up.
on your screen. Oh, on your screen. Let me see. No.
Allow drawing. This should work though. It's not allowing you to draw on the screen share. Color of the pen would be red.
Still trying. Maybe I'm not seeing it selected. Hold on.
That's all right.
I don't have any other. I'm not getting anything to say. Allow.
No, don't worry about it. I'll draw for you. Let me change this color for me though. Go to black. All right. What? Let me ask you a couple questions when I see this.
Here we go. I think I found it.
There you go. Look at that. Do you see it?
Woohoo!
Nice. All right. And you know how to erase it? Probably right click on it. Or I don't know. I never gave anybody, I think, the option to draw. That's just right there. So for me, if I right click, it allows me to erase all drawings.
Well, you got rid of them.
I think I did it. Good. I could erase it then.
That's fine.
All right. So we both could draw, right?
Right.
All right. Now these are the two smartest guys in Illinois going at it here, if you didn't already know. So if you look at this screen without knowing anything about not necessarily about any trading, but about rotation, if you're looking at my screen here, rotation or what these numbers mean and all this stuff, you're gonna be lost. You're gonna have people thinking that it's overly complicated. But once we get into rotation, let's open this up. Once we get into rotation, you isolate, okay, that's what that means. You know what imbalances are, absorption is, you know that how that affects order flow, possible stuck short, you know what that lingo means. And then delta, how that plays into it. And then we just move, that's how you make it simplistic to you. And then 1, 2, 3, what do we look for? And I'll let you go from there to explain. Start with 1 and just work your way through your thought process in this morning's trade or setup for you.
Sure. All right. So, I get to my desk this morning. It's the school year, so I have a little bit later start. I'll really start looking at this stuff around 8 o'clock in earnest. And you kind of noticed through the overnight session, we had this pivot area right up in here, these 99s. And then we also we were holding, so the trend seemed to be going up still after yesterday's nice move off the lows after the North Korean news. And then, as the trade, you can see the timestamp down here, a little hard to see, but this is all prior to the open right here. And in that time frame, we had this kind of this thin spot area right in here. So I was really interested in what was happening there with this imbalance right here.
That was the 97.75 area?
Correct.
Oh, shoot.
So this is
my screen.
Yep, go ahead.
Let me put you back on there. I'm sorry. Go ahead.
So I drop a line in there, and that's what this line is right here. Okay, this line right here is just exactly that. And I use a line because a line I can get over to every other chart that I have for the ES, or if I was to do like a rectangle zone or something like that, it doesn't show up as easily. It's harder to control. So that establishes that line right there. So when we were trading at the open, we opened right up in here. And you can see we kind of went up, but and then we were floating down, and the trade setup that I was looking for was a buy off of this in this area here, and we got it. We got a nice setup right here where we saw some absorption, a lot more selling than buying, A nice imbalance, some more selling against that buy. The offers there, the bids were much higher than the offers for the ask. A nice low 18 by 0 here
Wait, hold on. Are
against
you
this
drawing? Because I
earlier.
don't see your drawings anymore.
No, I'm not drawing. I was just circling
Okay.
with the.
Sorry. Go ahead.
So I'm really focused on it. So in the morning trade, this is where my eye is at. My eye is really right on this chart right here. So I got my wants. I'm against an area that I was interested in the market holding. We showed that we were printing a pattern that the market was holding. As I'm looking down here, I saw that we had these guys in here. All right, that was important. And then I was looking at this volume number. That volume number was much lower than that number. That's okay. This one right here was really low. This one right here was extremely low. But this is, I'm getting a little bit ahead of myself here. But you can see how the delta numbers were just sort of decreasing. This one went positive against what we had printed already. This told me that, yeah, this was a good area to take because I knew my risk was going to be down here. All right. So as long as we stayed above there, I was good to be long. And we got a test of this area, and right there. So this is kind of where I got in.
Hey, let me give you some audio to this. If it was just a pit, this will help you understand it. Let me do this first. Let me erase all the drawings, and I want you to redraw the decreasing delta at the bottom, the decreasing sell delta. You recircle it in black. In red. There you go. So look at this. It's what? 1975. What is that number?
That's 24.97 quarter.
No, I know, but what is that number? 1970 or 25 or 1025 in the delta?
Right here, just 19 quarter. Like 1935, I think.
All right. So we don't know that 313 next to it, circle 313 next to it. We don't know that is going to close at 313 or remain 313 until it moves aside and with a little bit more time expire. And these are just not scientific, just kind of accurate assumptions of, well, if you put audio to this, when you were at 1935, circle that. Let me get rid of these drawings. Recircle 1935. The selling would be sell. I'll sell it. And then it's 313. I'll sell it. And then you get to 29. I'll sell it. Do you see the volume get lower in those that wanted to sell it? So if you were to attach that to the sell delta decreasing, it would be sell. And when you have less aggressive selling, that's good for potential upside. Because I don't want aggressive selling to come in, even if it might get absorbed. I don't want to take the chance of it even coming in, because then I need the chance of someone having to absorb it. So if I'm long or looking to get long, and let's say I am long, I want to do it when I think there's decelerating sell delta, because every time it accelerates, there's a better chance we go lower. Because if you watch delta, you know that it generally moves and charts similar to price. That's why it's important. If they didn't move together and they were just all over the place, there'd be no rhyme or reason to use it. But the selling volume went down, tempo going down, and it was just another, would you say, in your 1, 2, 3, number 2?
Yeah, exactly.
And then if you look at the 1935, and I could also draw in here, my pen color is going to come in right there. You can look like right there, it's a down bar, but it's like, man, how the hell could you get 1900 sell delta and not have the son of a gun down to here? Well, because as he put absorption in this area, someone must have ate up at that stuff. And where did they eat it up? Right there.
Right.
So go ahead.
No, keep going.
No, because generally with that much delta, you should be lower. So you got absorption, and then as you move bar to bar, you're getting less people trying to sell the SHIT out of it. Go ahead.
Right. And so you get this initial reaction back up. Now let's push higher right here, and then we come down. So like you're saying, your bird story at work, as we know it's not going to go in a straight line, but we still did. It was a insignificant volume push. It was only 27. All right. So we don't have a lot of volume showing here. We still don't have a ton of volume, and that's what you want to have. If you want to have one of these reversal plays, you don't want this volume extremely high right here. You've already printed it right here. So what you want to see is you want to see them kind of like tease out the weak hands so we can get this move higher. Because then
Wait, say that again, Peter. You don't want to see a lot of volume where?
We don't want to see a lot of volume coming in down here. We don't want to see these numbers getting huge, all right, if we're going to be buying this area right here. So we want to see that. You said the decreasing delta, what we saw, plus we don't want to see this volume getting huge because we've already printed this volume right here, and we want to see that hold. So all we want to see is some weak hands get chased out.
I get it. So the rationale is less people are involved if there's less volume.
Right. And so you got your bird going up and down, and up away he goes. And this is where you get your volume right here.
Now, yeah, and that was the final. That was the payday on the trade.
Exactly.
Hey, what the hell
so then you're
just
taking
happened?
profits up here.
Anything? Everything's flashing around here. Not in the S&Ps, and everything else.
Yeah, we got some Fed heads talking.
Gold is getting smoked, I think. Gold, yen is flashing around.
It is yelling at the noontime today.
Nothing else is moving. I just seen gold and the yen flash. All right. So let me go into this and erase these drawings into what this looked like on an edge zone. Where the heck is my pen color? All right. I'll get back to you, Peter, though, if there's something else you want to say.
No worries.
Gold and yen are getting hit, so you could see some upside in this S&P. So we'll go back, open this chart up, and go back to the open, that's when that trade popped in, right? Right after the open?
Yeah, exactly.
And I think it's what the hell?
It's like 8:31 on my chart.
There we go. All right. It's right in.
There you go.
Here.
Let's see.
I have this slightly different than I did the room from a different office than I'm doing this meeting today. What the heck is going on? This yen is. What are we trading? 5.5. They are just stepping all over the yen, and we haven't rallied, or gold rather. Gold's moving faster.
Is gold moving up?
Down.
Okay.
Here. I'm not even signing. Here's gold.
Take a peek at the dollar. Is that rallying, Carl?
Yeah. Well, the yen's breaking. I got to change. I changed my min diff over there, and I got to change this one. So if you remember from the room today, I had well, let's just go. I'm not going to change it right now. I adjusted it. So there was actually an edge zone at 97. And I know you remember that because you said you had a zone in there too. You noticed that I had one on there, right? So there, even though there's not one in here, here's the thin spot that we're all familiar with double stack too. And it would have drawn the line across at 97. And that's where it came in. And then finally, the champagne was popped when it got through this red. This is the same pattern that Peter's using, right? Where it comes in,
yes, it is.
Rallies and goes. Yeah. I want people to use what's comfortable. Your chart is comfortable for you to look at, and my chart's comfortable for me to look at. Some might say they like the colors or what I have, and some might say yours, someone in the middle. This market has not rallied, which it's a dollar play. It's not a fear. Where fear, it's not any kind of carry a risk aversion where they're selling the yen, buying stocks. They're selling the yen because it's a strong dollar and a weak gold. That's why this thing, we go back to real time, should rally and didn't. So wait, strong dollar. Maybe it's a interest rate play. No, I don't overthink it. But this is bearish in here. I would think this holds. I mean, if someone, including me, would have bought, I wouldn't have been mad if I bought it and got stuck. I'd be mad that it didn't work, but I wouldn't be mad that they released Yellen's speech. I wouldn't be mad that he took the trade for those reasons. So it is probably her comments. It's the second time today my Trade the News didn't squawk out anything because they were offline on my side. Damn it. Let's go back to Peter's chart. Two times. See, that I gotta. If you would get mad at somebody else, then you should get mad at yourself if you did the same thing. You know what I mean? That's about what being fair is. So earlier today, Trade the News was off or had it muted or something. And what was it that came out? Something came out. Consumer confidence. We're getting closer to that. Well, I depend on them to remind me of that. And we got close to it. So it didn't really affect, that wasn't any kind of loss. But now there's no excuse not to know that Yellen said it would be imprudent to leave rates on hold until inflation reaches 2%, which is against what Kashikari, I think, said last night. There's considerable odds inflation won't stabilize at 2% for the next few years. If you remember, Tom, I think it was Kashikari said last night, who's dovish, that we shouldn't raise rates until inflation's 2%. She's opposite that, which is hawkish, which is why we sold off, which makes me wrong to say, hey, we should rally in here because the yen's breaking. That is important. So it's like if a guy is trading for me and he missed that, I'd be mad at him. So you got to get mad at yourself, whether it costs you money or not, to minimize you missing it again. Even though I wasn't planning on putting anything on hosting this meeting. All right, let's go back to Peter's image of his chart. Let me ask you this. The level interest in the morning, what's HW stand for?
It says morning hallmark.
Okay. What level of interest? Oh, it says level of interest morning. It doesn't say low interest. Level of interest.
Yeah, it's just for this meeting I made that just so I understood where I got that level from because
well, that's what I'm asking. What did you use to qualify what the level of interest was?
Well, we get this nice long up bar. And so I was looking at a continuation trade. You'll see the name of this appears continuation.
I got it. Yeah.
So this is what that's what I bucket as a continuation trade. So I'm looking for the trend, as I said earlier too, the trend was up. All right, and I was looking for it to continue to go up. So looking for a place to do that.
So your level of interest, is it fair to say, was bullish?
Correct.
Is that how you would say what's the level of interest?
Yeah.
What's the bias?
Yeah, exactly. Mm-hmm.
So your combination, if you're a fighter, might be right, left, right. And your right is it's bullish. Your left is where do I buy continuation? And your next punch is the delta decreasing.
Mm-hmm.
On an up trade, or I mean on a long trade, correct?
Right. So I'm just trying to capture, these people here who tried to push it down and they failed to get it to go down because they got met by this herd and then up it went.
I don't see your pen. What herd?
So I meant just they got met by this right here because they tried to push it down, and then these people here absorbed their selling pressure,
Yeah.
and then there was nobody left right in here, right? See, nobody left.
Is your and you're getting out for a loser where?
Oh, I'm getting out for losers right down in here. See, so as because this volume right here was non-existent, kind of a null area, no volume here. We pick up volume down in here. We start trading down into here, then there's some aggressive behavior, and it's going to go down through. Right?
Do you
saw
save
that?
these
Right,
PDFs?
right here, right here. Do I do what, Anthony?
Did you just make this PDF for this session, or do you have
No,
the?
I have a whole book of these babies. This is
What?
how I do my trade reviews. Pretty much almost every other day. I've started writing them since I picked up a scanner. I started like writing on them, scanning them, so I've got a digital record of them. But I've got a whole stack of them.
That's cool. And it's simple though. It's just bang, bam, bam. Why am I going to do this?
I mean, I got some from years ago that I look at them now, like they're really complicated. There's too much stuff going on. I got like
Yeah.
moving averages, got MACDs, I got stochastics. It's a mess.
I remember like I saved it. I think I saved it, and I have them. Is the mass printouts of all the trades. And all we had time to go over, though, if you're going through a round table of discussion and review, was you couldn't go over all your trades. It would be crazy for you to do that. But the runs, it's like the thin spots of your day. When thin spots of your day is when you had 4 winners in a row or 2 losers in a row, the runners. That's like a thin spot of your session because it went up or down fast. Your P&L went up fast or your P&L went down fast. Those are your runners. Go over that. What were you thinking? Did you just catch it because it was a good move, or was there a good setup within that series of trades? And what are you doing with your runners that are wrong? You doing something different? You could change it. If you're not, hey, that's just business.
Right. So there's really 3, you do the winners, those are the fun ones to do, right? But you also do the losers. I do some losers too. And I'll spend actually a little bit more time actually on those that I miss. If I see something and I missed it, I'll make a real point to do that.
Yeah, that's the ones that cost you the most, or you can learn the most from.
Exactly. Yeah.
And they're invisible as far as trying to find data on them because you didn't do anything, yet they're important.
Right. So I mean, if you want to see, like, you can get an idea. If you took a look at this chart, because this is my bread and butter chart, you can go back to a couple years ago when I first joined. You had me do one of these sessions live, and that's recorded in the Edge program. If you could find it, if somebody wants to go back and find it, you can see the evolution of those charts versus what you see on here. They're vastly different.
Yeah, Peter H. And there is some lineage to Hugh Hefner, isn't it? Isn't there?
Or was it's kind of like a Roosevelt thing. It's really far out on a tree, like in between Teddy. It was like 7 generations, and for me, I think it's like 8 or 9.
So do you trade in your robe?
Yeah, I could get it when I sent a letter once when I was a kid. I got a note back that said you could get a subscription free to the Playboy magazine, but you're not going to get anything else.
This is your last name.
Right.
Yeah, I never heard of Playboy. What is that? Is that a magazine or?
Before your time, then I guess.
Never heard, yeah. It's interesting. They do that?
This shit's deep, buddy.
It's funny. So as long as you oh shoot, I lost your chart. Is this your setup on sell-offs too, where you look to sell the rally or a retracement?
Yeah.
Back?
So if I had a reason to be really bearish, you could see that there's some symmetry between this and up here.
Up here, when you say where, I don't see your cursor.
Right up in here.
We don't see your cursor. We only see when you draw.
Okay. You see the red?
Yeah.
Okay, so there's some symmetry in terms of that up there, too, in terms of being able to come down. But for me personally, I have found that these types of trades are a bit harder for me to take consistently and be consistently profitable with those trades. So, what I will typically do is, because I like to trade on the long side, I find those easier, and especially the continuation trades, is I'll wait for actually a bull to bear bar to happen, or some sort of a transition. And we had one yesterday where we came back down. I think it was through the 95 level even too, where we had played the 95 up twice, and then on the third time down in the North Korean news, it broke, and it gave a pretty good pattern for the break. And it was kind of like the flip of this. It was a big down. It was one of these was a big down bar, and there were a whole bunch of these, right?
Yeah. And they were coming
Consolidating.
underneath some red zones.
Right, and then we fell out of that. That's my short setup. I just really want to take a lot of those. I'll take those.
Because you got some sort of
Right,
event.
I got a backstop right here, so I can define my risk above that. So I'd like to see this flipped and reversed for my shorts. I don't like to take the fade up here too often. I'll most often take a fade down here.
If you take all your trades, are you buying? Are you getting long more than you're getting short?
On a percentage basis, yeah.
And if you're trading the ES, it almost should be like that because it's been bullish more than it's bearish.
It's worked the best. And there were times years ago I was always fading these up moves, all these peaks here, and I got tired of getting the scars.
Well, I mean, it makes sense that it's bullish on a bigger trend, and not that you're not going to take short trades, but overall you're taking the higher probability trades have been to the long side because the bulls seem to get their way.
Right. And what I won't do though is I won't take that short trade down in here. I won't play those breakdowns. These right in here. I got like almost no success in doing those. It's very rare that those work for me. I'm mostly taking them. Like I say, if I come up here and I see a good good pattern of some resistance, then I'll take it up here.
Then you caught the lows off the 85, 87 after North Korea, didn't you? Yesterday?
Let me page. Yeah, let me page back.
Absorption?
So there's a pivot point. There was a point. It was right around 9:45, just before 9:45. We had 96 would have been the stop, and I think I had said in the room I'm not getting long down in here, so I waited.
Let me go back here.
Go back to like about 9:26 is the down bar on the 4 PNF.
No, it was at after 11, wasn't it? Oh, no, you're right. It was in here.
Right.
Oh, wait, maybe.
No, you got to go back a little bit further.
I don't think it came down here. It was after 10 Central.
There was an initial down move where we missed there's an initial move down where we missed
Not
95s.
No, not this far.
Right, and then at 10 o'clock there was more news out and it came down further.
Yeah, well, I mean, it came down to mid 90s and then got into the mid 80s.
So suffice to say, go if you go to 926 on your chart, you get 926.
The time?
Yeah.
Okay.
Take a look at 926.
Actually, got a B2B bar on.
Bingo. You're right there. You're right there. Okay, so you got that move up top there. So we had been playing that long down, from before that in the morning, before 9 o'clock, and then we got that nasty churn right up in here.
Yeah, sorry.
Yeah, that's all right. Right up in here. Okay, and then we get this churn down. And there's some guys that are good at hitting that, and they hit it, and they took this down for a little bit, and that's great. But this is mine. This is where I like to play. I like this better down in here on the ES. Because you get this big lump of coal right there, and that's your risk. When you start seeing this,
right?
You start seeing the auction get all cut off right there.
You already know it took out a big level. You already got news that could, facilitate. See, and if you're playing and if you're following the news, because the news didn't just come out in one shot, it was dripped out because he was literally giving a press conference. And the thing that spilled us over, a good win moment, was he started talking about shooting down planes.
Right.
Shooting
At
more
any
green.
rate, that's that. I mean, so there's two potential, I think, places there for you to get short, and I, I like those that it looks like there's something very nasty. We're getting a little bit of news drippage that something's not right, and we can kind of see that they're not going to take it back up, and they printed a good amount of volume on that long down bar. So I just use that long down bar to lean against.
Yeah, well, and I could tell you that the you're looking for decelerating positive delta when you're going short, right? Each bar, you're looking for the positive delta to become less and less, correct?
Yep.
And it looks like without me having it, it was. I'm just doing the math in my head. Here's a here's a big thing. The first long green bars that came from the past worked as a temporary bottom until it doesn't work. Then the next series of long bars work and actually hold as the bottom. But the difference between this guy here and this guy here, before you know about this, is that this red was taken out. And we talked about this live in the room yesterday in here. The difference between in here and trying to find a bottom over here. This was essentially the first red zone that was taken out. You don't know if it's taken out for sure, a couple ticks above it in real time, but you do once you're over here and you're establishing some imbalanced green coming in. And then there was another ancillary that I think might have been the NASDAQ that took out some reds themselves. So you got a target, you got maybe the sell pressure being released and release or bounce off the fear of sell-off that happened. You're always going to get a bounce, especially with this North Korea. It just seems like you're going to come back at some point, but you can get killed trying to play it. Let it happen, and then find a place to play it if you didn't take advantage of the way down. And if you did take advantage of the way down, what could you see? Trading is all about only being able to make decisions on what you see. And where people get in trouble is we already know it went up. But in the room, what do we see? What do we see? What do we know? We know that this broke it in here. We know that at this point. What do we see? Some green coming out. What do we see? This could have held. What do we know? Well, my risk would be in here. So you don't know this, but you do know the things I just ran through. And that's how you stay on the right side. Right edge. How do you stay on the right edge? Not trying to look about, too much back. Just what the hell just happened? Man, I'd be pissed if I was short and I missed covering it down here once I see this. Well, maybe others are too. Yeah, maybe. And then you kind of go from there. You want to add anything, Peter?
Just I say you have to keep it in context. When I say continuation, it's because I'm looking for that trend to continue for a little bit more. Breakout trades, breakdown trades, those are a bit different. Those are fading. Those are all they're a little bit different. You have to keep kind of like the context of what's happening around you.
Where do you get in trouble? When you screw up, what do you do?
I chase. I don't wait for the test.
You're reaching.
Yeah, exactly. Yeah, like you can look at this morning when I would have bought, if I was not doing it right, I would have bought when it went back up to that high. I would have tried to buy it there or in there, and then when it came back, stopped out, right? So I would have tried to buy this area here because it ran up, and it doesn't, and then it falls through down here, and I stop out, and then what does it do? It goes, if it goes up, but now all my emotional capital is screwed. You're frustrated. You just got, so it just ruins your whole day.
You were right and lost money instead of being right and make money.
It's the worst feeling in the world. I get a lot of little charts.
Well, what's good is that though.
Oh yeah, well, and you don't, and once you get, I think if anybody is having that problem, look, do yourself a favor, start making some hard copies of these things, start writing them down, and then you'll start to remember them, and then gradually you'll modify your behavior so that way you don't do those things anymore.
And the reason why you have that problem is because you're worried about missing it.
Exactly. Oh my gosh, I'm right. It's gonna go higher. But alas, the market knows these things. The market knows these things, and it knows how to maximize pain, and so it comes back down. But if you're thinking and you're keeping your emotions in check, I quit at this moment my stomach is going crazy and I've got adrenaline running through my blood. It's my muscles are all tightening up. I got to force myself to breathe and then focus on this event. And you see that, and then you can be more comfortable saying, okay, now I know where my risk is at. I've gotten the signal. It's tested. I'm good to go. Now, the only time to take this is when something new has happened in the market, like you get some sort of a big news flash.
Yeah, right.
Democrats have agreed to a 15% or 10% tax rate. Yeah. Oh, just buy. Don't worry about it, man. Just buy.
Yeah, you're on the right. The market's already bullish, and now you got bullish fundamentals. You're not going to have a pullback. That's right. That's good. You're not buying because you're afraid to miss it. You're buying because the timing is right. I mean,
right. So if I don't have some sort of external inputs, something happening out there, I'm not going to buy that push through. I just won't do it.
What's the best thing that the Edge taught you or helped you with?
Gosh, the best thing. I'm not so sure there's one thing, Anthony, but I'd say yeah, the community, right, guys, right? You can imagine what I'm getting in my ear right now.
Them.
Yeah, exactly. It's all about them.
Them.
I think being realistic with my expectations and understanding, where you're going to get out. Also, too, what are potential upside targets? Being realistic with your upside targets. I think one of my bigger issues in the past had been I had lousy target recognition. That's much better now.
And we only kid. The community is a big part of. Hey, anytime that you could say people have created lifetime relationships and they wouldn't have otherwise met, that's powerful, because the only reason why you become friends is because, well, you had a chance to meet the person, but you click, and that's when good communities are good. So that's a big element of it.
Yeah, I mean, guys are sharing their thoughts and ideas, not just their trades that they've taken, like I say, like they have taken, they're sharing their thoughts and ideas before these events even happen. And then, we talk about our results, our execution, afterwards.
It's the right people sharing the right stuff.
Right. Right. And then, there's always research going on, behind the scenes on trying to develop, different looks to the charts and such. And that just helps peel the onion back. So we create a better understanding of what's going on in here. I mean, we used to talk about before the Chicago about buyers aren't being able to push it up, they're getting stuck, and sellers can't get it to go down. And then we just sharpened up our language a lot with this absorption concept.
Yeah, I like that absorption stuff from the workshop. That was well, you never stop working because there's always a better way to look at the same thing. There's no question. So I'm going to stop the recording and end this session officially.